Good afternoon, traders. This is Christian from Hertz, Tribeca Trade Group, and it is Friday, June 12th, so the end of the week. And what a week it was! Wow, a lot of action this week from where we were just a couple days ago. A big reversal in the week's performance for the week. If you want to just quickly look at the performance for the week, obviously, first red week that we've had. I didn't go back and check when the last down week it's been, but 3 or 4 weeks, I want to say. So SPY finished down almost 5% for the week, down 4.7% for the week. Just change. Let me just move this 1 second. Something's in my way here. There we go. The diamonds, so the Dow, which I know not many people follow anymore, but down 5.4. That's a whole other subject. Down 5.4% for the week. The small caps, which kind of gave a little bit of a signal earlier in the week, they were weak before the really got hit before the S&P and the Qs. The Qs, by the way, finished fine for the week. Down 1.6%, not very extreme at all. International, which outperformed last week. Basically gave back a lot of those gains. Emerging markets were only down 2.6% for the week. That's kind of they did outperform technically. They were obviously down, but did better for the second week in a row over S&P. And then bonds and golds, kind of just confirming, the overall week was risk off. They both finished positive. Bonds doing a little bit better. Interesting too. If I can get to those two charts, I will. But they kind of showed, the possibility of a false breakdown, which happens a lot. It seems to be happening a lot this year, where it looks like some things are going to break down, and then they actually, reverse what they did and come back. So that's the week's performance. And if you got through this week and you're still alive and kicking, congratulations. There's always something to learn. I mean, it is what it is. If you've been trading for a while, this kind of you roll with the punches. But the one thing that I think is a little bit different is just the speed of what we've been seeing overall in 2020. It's much faster. To kind of see what happened yesterday, which was interesting because I personally was expecting that kind of a move or some type of volatility on Fed Day on Wednesday, and we didn't get it. And then I think people let that digest for a little bit. XLF saw the biggest outflow ever of the financials ETF, the biggest one day and the biggest weekly outflow ever, bigger than 2008, 2009. So I think people really thought about what Powell said, as well as what's going on with fears about a second wave of the coronavirus, and decided to take a lot of money out of financials. Now, keep that in perspective, right? Because sometimes people don't give you the perspective. The week before, XLF saw a lot of inflows, but yeah, they took their money and run. I don't think I still have that chart up. Do I? Yeah, here it is. Here's the weekly. That's XLV, which also saw a big outflow. But here is XLF. But you could see on the bottom of your screen, this is set to weekly, not daily. I'll switch it to daily in a second. But yeah, I mean, if you go back, I did check to make sure, but 2008, 2009, this was a big outflow too. But this is $2 billion. This was 2.6 for the week. So pretty interesting. So that kind of just goes in line with what I started to say. You can see for the day, if you want to see, I mean, that's what it looks like if I adjust to just a regular daily, and you could see the volume right on the left of your screen. If I want to use this for one, but no, I just thought that was really significant. It didn't get very much press today. People, obviously more concerned with what Hertz is doing. No, I'm just kidding. But these moves, right? And I think that also what contributed. Now, all of 2020, we've seen a lot of fast moves, but just kind of what contributed to yesterday's move, and some of today's quick action too, is just how complacent we got. And so the more that you kind of do what you're doing and get overextended like we were, we've talked a lot about this the last 3 weeks. One of the models that I have talked about over and over is the Citigroup model. That's the market sentiment model, panic euphoria. It's been in euphoria for about 3 weeks. We know that the put call ratio got super, super, uh, you know, I'll just say complacent because I like to describe it as complacent. I think it hit a point 0.4, that put call ratio. So very, very unusual. And then I don't pay for like the S&P sediment indicator. What's the oscillator? I know Jim Cramer talks about that a lot, and that got to like a record level. So, these things were really extreme in terms of sediment. Fear and greed, I don't really look at. I know some people like that one. I don't really like that model that well. It just never has given me great signals unless the thing is in like the single digits. But in my opinion, all these sediment areas got super, super hot. So when that happens, you could see a decent spillover. When the market is overcrowded, which I think, like, and also if you look at some of these sentiment surveys, like the bull versus bear sentiment, like the I forget the exact name of it, but same thing. Like, it's the same story. It's not important. And what's important is that there was a lot of people switched over to the bullish side, and usually what that happens when everybody's leaning on one side of the fence or one side of the boat kind of tips over a little bit, and I think that's what we got. So, how is this going to shake out for next week? So, I tell you, one of the things that I was looking at, and I did not like how. So, if we look at today's 5-minute price action, I didn't like how we took out yesterday's lows, but this is kind of a kick save. And I'll tell you, when I saw this, when we broke the lows, again, I always like to tell you guys what I do, but I did puke up some positions. I said, you know what, I'm just going to clean the slate going into next week. I'm happy where I am in terms of P&L for the month. I gave a little bit back yesterday. A couple positions, obviously, I had to sell for a loss too, because I sold right around the lows of the day. I wanted to go get lunch, and I wanted a clean head, which is fine. And so all in all, that said, I'm still up nicely for the month. I'm not up as much as I was a couple of days ago, but I'm still have a nice green month to build off of, and now I basically hit the reset button with my positions and so forth, and I'm not anchored to anything. Because again, sometimes I really like to do that because it just allows me to be a little bit more objective and to kind of just see the market for what it is. Because I think, if we can kind of get through this, and if this little spell of volatility that we have over the last couple of days, which hopefully is just, when you put things in perspective, is probably not that big of a deal. I am more concerned, and I think the market is concerned about whether or not some states are going to have an issue with a big second wave of coronavirus. So we don't know that yet. I think New York will be the tell. And if you look at the New York cases, new cases haven't really budged. So that's good, knock on wood. California had a good number today. And which one? Florida and Texas still are having bad numbers. They're increasing. So the market is really reacting to this. And if you don't believe me, you could look at the time and sales. When that Florida report came out this morning. Let's see if I can find. This really quickly. If not, I'll move on. All right, so here's the 7-day average. The cases are in line with the 7-day, but 2.8. So this came out at 10:47. So where were we at 10:47? I think right around here. Right, so we did go lower, and then we heard about Texas too. So the market is reacting to this stuff. The market does not want to see another, a second wave of that. That's my opinion, and I try to match it up with what I'm seeing headlines and how the market reacts to it. So I think this one will be the key. Of course, there'll be California and all the other states are definitely important, but if New York, which got hit with this first, and then maybe New Jersey as well, if this starts to tick up, then I think we are going to see some more volatility to the downside. If it doesn't, if things kind of stay as is, or it's a small, tick higher and it's manageable, and the governments, agree that it's manageable and they can move forward with opening up the country, then I think that we have a chance to kind of do pretty well here, and the setups will kind of come. And that kind of speaks to so again, I like to look at these factors as well as the technicals, a little bit of a combination of both. But I rely more on the technicals probably than anything else. But if you see where we closed, right? I tweeted this out earlier, and somebody gave me a hard time saying that, oh, as soon as you were negative, the market went up. That's fine. I don't care. Hey, if I could be like the opposite guy, where you could be Costanza, where I can give you a Costanza tweet and you do the opposite and it works, that's completely fine. But we're holding the line here. So, yes, that's a pretty ugly candle. We've talked about that. It does look like it's a bearish engulfing, but we'll see. We'll see what happens from here. I hate to say that, and that's basically why I cleaned up my positions and didn't really go into the weekend long much, except for just an SPX call spread, and I have a couple of residual positions left. I've got some Microsoft on, but I'm really like bare bones right now in terms of positioning, just in case we do have some more volatility. And I do think that if this settles down a little bit, the good news is that a lot of opportunities will start to emerge. I think you probably realized in the middle of the week too that almost there's so many different areas, so many groups that had broken out to the upside. The opinions, the setups begin to get a little bit scarce. So, that's basically just how it works. Things get a little bit exhausted to the upside, and then you can kind of go from there. So, then we can kind of go from there. Sorry, I'm reading a text message. But that's how this looks. The good news too is the S&P on the daily, we do have some support. So even if we were to go a little bit lower, while I don't want to see us break that 3022 level next week, as long as we basically finished above there, I think that's really good. But it won't be that damaging, I think, if we basically fall a little bit further into this support on the daily. So that's my thought on that. The 1 hour chart, kind of interesting that we did test this. Just make sure I got the right chart in here. We came into value for a little bit, and then we basically fell right out of here. So again, really not too conclusive. I want to kind of stick with the positives here in this video. One thing that I was complaining about yesterday was that the put call ratio was not showing enough fear. This is better, 0.91. So gets the kind of, when I see something like this, what that does is it basically shakes the weak hands out of the market, right? And gets that complacency out of the market. Now you got a little bit of fear, right? Those are better places to buy. And if we didn't get that today, then I would have, if we would have had like another 0.6, in terms of the put call ratio, I would have said, hey, there's still people are not fearful enough. So again, this doesn't mean like the rubber band is going to snap the other way. It's just one of those boxes that I like to check to see that we've got some more fear. Speaking of fear, let's look at the VIX. What happened with the VIX today? That's another piece of the puzzle, right? I talked about how I did not like that yesterday, that we closed, basically on the highs yesterday, over 40. So today we actually took out the highs, just like I mentioned, we took out the lows and bounced. The VIX took out the highs like with no problem, went up to about 44 today, and then backed all the way off to 36. So again, that's I would rather have this kind of bar, even though it's just an inside bar, which you can't really determine too much from that. But I think that's it's much better to see this VIX come in. I was talking about this in the member midday video that if it stays around 40, you're going to have to make some adjustments, and we talked about those adjustments in that video. But all in all, it's nice to see this close back, in more of like a moderate, still heightened level, but pretty moderate. The other thing that can notice from this chart too is, wow, look at the 200-day moving average, how this thing catapulted off the 200-day moving average. So no break, a move all the way down. It took months, right? It took us over 3 months basically to get back to that 200-day moving average. And then and then it's funny how it does that, and then it moved up pretty higher. I mentioned I would go over a few other charts here in this video just to see, Qs are still a better looking picture. They're above value. Also for the week, it's basically just an inside bar for the Qs. So I continue to think that that's where the strength is going to be. At times, it's going to get sold when it gets overbought, but I think there's nothing wrong with that check back. I think that looks quite normal. This is the messiest one of them all. Let's start with the weekly. Weekly, you got a pretty decent rejection, and that is a bearish. So again, I said I was going to try to be positive, so maybe I'll just talk fast about this one because this is pretty negative. You got a nasty bearish engulfing. I got a question today. What is a bearish engulfing candlestick pattern? Well, it's when the current candlestick period, so this is this week's action, and it tried to go higher, right? This is where we opened, or this is the high of the high of the range is here. This is where we opened, and this is where we closed for the week. And that takes this body of this candle, fully engulfs or takes out the previous week. So that's generally a bearish sign. So we'll have to keep an eye on what those small caps do. Similarly, like the S&P and the Nasdaq, they did not break into the June value area. Right. So again, when I look at the weekly chart, that's the value area for the whole year. When we look at the daily chart, that's the value area for the month. So for the month of June, S&P, Qs, or Nasdaq, and IWM are all still above the June value area. So all in all, not that bad. Kind of a check back. So if that's as far as we go, that's just a typical pullback. And again, all in all, not that bad. So we'll see how this goes next week. And again, to be positive, if you haven't experienced one of these pullbacks, if you're kind of, I know that there's definitely more new retail traders that have come out in the last couple of months. This is really good for you. What I would do is, if you haven't already, make sure that you have some type of trading journal and write down like what you thought happened this week. And if you were off guard or if you handled it very well, all the same, write a couple things, because what happens is you forget. A week later, you forget about this day, what happened this week. But there's some lessons, right? We talked a lot about that over the last couple days. One of the things that I stressed was do not get caught off guard. If we're due for volatility, and one of the things I said was I have no idea when we get that volatility, but it's coming at some point. So you have to be a little bit prepared for those types of things. And so here's what I traded today. Nothing nothing groundbreaking. I mentioned I had exposure from yesterday. I think that's basically today was kind of textbook, right? When we're down, how much did we fall yesterday? Like 4%. So if we go SPY, whoops. So if we look at SPY yesterday was down 5.7%, and normally when we bounce like we did pre-market, people who added risk yesterday, they get a gift in the first 15 minutes, right? Where they can basically get out of that exposure. Or if you were caught in names and the market, was up when we started the day up 2%, those people also get a gift, right? So you get a get out of free jail card, and that's also why that's kind of contributed to the market selling off on the open. Is everybody wants to get out of that risk that they put on the previous day, especially there were some things that were up like 4 or 5% around the open. So that's the standard drill, for why the market moved down on the open. And again, this is the performance. So all in all, like there wasn't anything that really went up after today's open. There was a lot of profit taking, in some things. Like even most of these were up on the day, right? OIH, even like the energy names, which I don't really traffic in that much, but the aerospace defense group was up 3%, closed up 3%, but opened up 5% on the day. So again, some profit taking in there. All right, guys. So that's the end of your Friday weekend week summary. The way I will leave it is that this is probably like I'm leaning towards the side that this is going to set up some really nice setups. You just have to let the dust settle and just kind of be ready for it and wait for the setups to materialize. That's always one of the things whenever we get a pullback, because we never know if we're going to get like the garden variety of a pullback, or if it's just going to be 1 or 2 days or 2 to 3 days. So you just have to kind of plan accordingly. Think about what you're going to do while the market is closed, not while the market is open. And this way you don't get caught adding too much exposure in the wrong place. All right, guys, thanks for watching and have a wonderful weekend. Thanks, everybody.